Good morning. It is Brian Split with agmarket.net. It is currently January 26th. That's a Thursday at 5:41 a.m. as we speak. March corn is up 2 3/4 at 677.5. March soybeans up 8.5 at 15.11. March soy meal up 3.3 at 468.8. We have March Chicago wheat up 1.5 at 742 3/4 cents. March hard red wheat KC up 4 3/4 at 848, and the March spring wheat up 1/4 cent at 909 3/4 cents.
Good morning, everyone. We've got several things to talk about here today. We've got Betsy Gibbon along with us as well. So, Betsy, we need some solid analysis from you too, if you want to throw something in. But Brian, the first thing I want to kind of talk about is export sales yesterday. Obviously, I tell you what, it's been rough as far as corn's been concerned. But I had a couple of surprise sales there yesterday morning. I think corn was maybe a little more notable than soybeans. What'd you make out of the sales announcements yesterday morning?
Well, I think it's important that we're seeing the sale. First of all, this is the sixth sale of the year. So we're starting to see a little bit more activity on the export front for corn, and that's what we need. It's no secret that we've been running behind the pace that we need to see in order to hit USDA goals. So we are coming up to shipment season. A lot of these spreads have been trading very strong. So I watch the May July corn spread pretty closely as an indicator of potential export business that's being done and getting ready. And that spread after the January report has broken out to the upsides. We're seeing May currently trading about 11 cents over July. And I think these are just good signs of future business to come.
Yeah, absolutely. I think whenever it gets right down to it, a lot of speculation about are we going to see things pick up? Of course, in this time frame, this is going to be your prime time for corn sales and shipments. Quite frankly, sales have just been atrocious, so we need to see both those pick up in short order. So hopefully, we'll see a little bit more of what we saw yesterday. Ethanol, a little slight uptick in ethanol, corn usage for ethanol yesterday. One thing that I noticed, though, of course, was that stocks up a little bit more than what we'd like to maybe see. And so, I'm not so sure that we're using as much or driving as much as maybe what you would hope. But I mean, this is winter time frame, so you got to understand that. But as far as corn usage for ethanol goes, there's been a lot of speculation. We were going to essentially dial back, and maybe the USDA was going to have to kind of drop those numbers moving forward. We saw a couple of really rough weeks, but we basically rebounded to the pace that we need. You think that we'll be able to hold this kind of pace to where we can avoid maybe a cut in future reports?
I think so. When you think about what we saw over the last several weeks, maybe a month or so, some of the concerns, like you had mentioned, would be from the stock side of things building a little bit. But we saw a little bit of a drop in the run rates, but I think that was just more seasonal, especially with some of that really intense cold that we had. And then we rebounded rather quickly as things moderated weather-wise. So the USDA did not see any evidence thus far to reduce corn for ethanol, and on that January report, they hit the feed residual, they hit the industrial, they hit the export. So maybe this corn for ethanol is going to be a little bit of a bright spot here moving forward. And as long as we can continue to get corn into the ethanol producers' hands, we're going to continue to use it.
Yeah, absolutely. I think as long as those guys out west don't have to pay up too much, maybe their margins will remain intact enough that they can still kind of boil through some of this. I think one thing that was concerning for me, I've thumbing through, I saw this on AgWeb. Mexico hopes to reduce corn imports 30 to 40%. Read through the article. They basically produce all the white corn they need to produce, but they're talking about major reductions by 2024. I mean, that's what, 1 year away. So obviously there's a lot of moving parts here. We discussed this a little bit before we came on. We're not going to solve all this, but this is a definite big red flag, I would say. Wouldn't you think, Brian?
It is. And so I just don't understand, what does Mexico, are we replacing this corn with something else? This is, as you'd mentioned, there's sufficient on white corn. So we're talking yellow number 2 for livestock production. 30 to 40% is going to be roughly 16 million tons. So does that mean that we are going to see them reduce their livestock output? Are they going to be using a different product to feed the same amount of livestock? So there's some questions I have. But like you mentioned, their goal is to have this done by January 31st of 2024. So this is just 1 year away. And I just don't know that that's realistic for them to accomplish that.
Absolutely. I know they've been wanting to cut back on GMO, if not eliminate it. I think there's just been a lot of rhetoric there, but by all means, I think they want to cut back on their dependence. So it'd be very interesting to see how this plays out moving forward. Obviously, as far as weather goes, you're not going to be looking at a whole lot of winter kill, which is kind of nice to see. But one thing I would note whenever we look at what's going on in the plains, it sure looks to me like we've really started kind of recharge this part of the world. It's nice to see a storm system actually catch part of Texas and Kansas. Definitely not solving all our problems yet, but I think a couple of good things here. Got a little bit of moisture, and it doesn't look like, according to folks like Drew Lerner, that we're going to see much winter kill.
And I think maybe the thing that is most notable is just the shift in the pattern. So we've seen some moisture hit California, as you mentioned. Now we've seen it where got a winter storm that's been able to reach Texas. So things do seem to be shifting. There is a call for La Nina to develop into an El Nino, and again, that takes time for that to happen. But we are seeing a general pattern shift in weather, and I think that would be more supportive for crops, not only domestically, but if that pattern does shift, that might be beneficial for the safrinha crop coming up out of Brazil as well.
Oh, absolutely. And we had a really good webinar on our own site there, a couple weeks ago with Eric Snodgrass that noted the same thing. I think there's a lot of pattern shift here that certainly could be something you want to pay very close attention to, not only for South American weather, but of course what we're talking about here in our part of the world. You look at Bank of Canada, basically say we're going to have to cut out on these interest rate hikes, and folks are wondering, is the Fed going to follow suit? I think the bottom line for me is that the Fed has made no indications they're going to follow suit with something like this. But at the same time, you've got to ask yourself, is that the way we're going to go? I mean, are we going to keep raising? I don't think we can expect a lot more in interest rate hikes this year, but I think one more rate hike seems to be imminent, at least in my opinion.
Yeah, one more seems to be imminent, and I don't think there's much discussion against that thought process. But we definitely have a stock market right now that is making it easier for the Fed to continue on their path of raising rates. We haven't really seen this major washout in equities. We've definitely seen a more of a downward trend, but it's been able to hold itself together and find really good bounces. So at least from the perspective of concerns about the equity market rolling over and taking a big haircut, we've seen the Dow, the S&P, and the Nasdaq all really recover nicely off of major lows that were made, and I think that just makes the Fed's job a little bit easier and continue on the path they're on.
No, absolutely. I totally agree. A lot of unrest going on. Of course, this week a little bit. You see tensions go down, tensions go up. But in my opinion, we've got a lot going on here. And I know, Brian, I'm not going to steal your thunder. You made a couple of really good points when we talked about these couple of headlines here. We could have some interesting battles, U.S. equipment versus U.S. equipment coming up. But what's going on in that part of the world? It's not a laughing matter. But there's certainly a lot of issues that could have a big impact worldwide, not only just when we're talking corn and wheat, for instance, but share with us what you were telling me before we went on the show, Brian.
Right. So we've got U.S. and Germany are going to send battle tanks to Ukraine. And so that in and of itself would provide the Ukraine with a little bit more support here militarily. Does that lead to an increase in kinetic activity in the Black Sea region? And then at the same time, we have Putin in negotiations with the Taliban, and that was reported through the Taliban's Telegram channel. And so what that means is maybe we have a scenario where we just negotiated for the release of the death merchant, which is a Russian arms dealer. Is this the gentleman that is now dealing with the Taliban to try to secure military equipment that was left by the U.S. in Afghanistan? And as you had mentioned, are we going to have U.S. tanks on one side of the battlefield at some point fighting U.S. equipment that was left in Afghanistan? And so we're going to have military equipment from the United States on both sides of this conflict. And that's, I don't know if I want to laugh about that or cry about that, but that's just an interesting thought process. And so are we going to see an increase in the military kinetic activity in the first 3 to 6 months of 2023 if this comes to fruition?
Yeah, we certainly have to see cooler heads prevail, or that's what we would hope to see. But as of right now, there's certainly a lot going on in that part of the world. So you look at money supply versus inflation. I mean, obviously, inflation's backed off somewhat, but I know you were talking about this quite a bit ahead of time, Brian. I think you got some pretty good analysis here.
Yeah, this is from longtermtrends.com, and it just shows the M2 money supply growth versus the inflation rate, so the CPI. And I just think the thing that we're looking at pointing out here is that as the M2 money supply has rolled over, we should typically see the CPI lag and eventually roll over as well. So it looks like that is starting. And I think it's notable to point out that the M2 money supply has now gone negative. And so we've seen that generally start to level off at this point. But do we see CPI come back down and hit some of these levels where we've seen in possibly 2014, 15, 16, where it's back into that 2%, 1% area? And so it's just definitely something worth watching out for if you're one of those bulls on inflation based on M2 money supply. The M2 money supply is contracting rather aggressively right now.
No, absolutely. And so, as we're going to wrap up here, Brian, what do you got going on in the livestock world?
Yeah, so yesterday we did have a pretty quiet market in the proteins. April live cattle was up 25 points. April lean hogs down 5, and March feeders were up 15. With the corn board higher this morning, maybe we see a little bit of pressure early in feeders and then see how we go from there. Crude oil currently up 63 cents in the March contract. Products are mixed. RBOB up 22 points. Heating oil down 50. Looks like natural gas down yet another 13 cents. We're trading just below 280 on natural gas currently. U.S. dollar up 14 at 101.55, and we've got some mixed trade in the equities. Dow futures down 25, S&P is up 6, and the Nasdaq is up 65. So we're going to wrap it up with that. Thank you for listening, and we'll be back with you tomorrow. And hey, Joe, thanks for letting us have control of the show as you took the training wheels off for us to go do the AgView Solutions meeting in Florida with the Chris Barron and Shay folks. We really appreciate that.
Absolutely.